Good morning. Welcome to the Resolution Foundation for our event on trade in the age of Trumponomics. And as this is all about comparative advantage, welcome to a functioning democracy with a stable government with a large majority that is not facing martial law, where the government is not about to resign, and there is not an impending election because a coalition has collapsed. So we do have some things going in our favour. We're going to hear from our senior economist, Emily Fry, who has produced her paper out today on trade issues, and we have a fantastic panel then to discuss it. Kim Darroch, who was British ambassador to the US from 2016 till 2019, giving him a very special, distinctive position to observe Trump 1. And as well as his US experience, he was, of course, the UK permanent representative to the European Union. We have John Dew, who is Professor of Economics at Aston Business School and has written widely on trade and productivity performance. And John Alty, who I remember from his time as an official in Bays and then in the Department for International Trade. He was the Director General for Trade Policy, 2016 to 2021, which also seems to match quite closely the first Trump presidency. So let us start with Emily. Over to you.
Thank you, David. So I'd like to start by thanking my co-author on this report, Sophie Hale. And so these are anxious times in global trade. Trade has faced multiple years of disruption due to Brexit and COVID. And now President-elect Trump has now floated the idea of 10 to 20% universal tariffs on trade. The impact of these tariffs would clearly depend on how they're designed and how countries respond. But for firms exporting goods to the US, tariffs of this scale would be on the equivalent scale to the non-tariff barriers that Brexit imposed on goods exports. If Trump's super tariffs on rivals like China combine with global retaliation, then the risk is that we lurch towards increasing global trade tensions. In the face of this, it's easy to think that Trump's tariffs present a new choice for Britain, whether to negotiate with the Yanks or with our EU neighbours. As shown in this meme, thanks to Sam Lowe for this. But first, we need to reflect on Britain's inheritance from two recent economic shocks, Brexit and COVID. Here I'm showing an index of our goods and services exports by the UK since 2005. You can clearly see here that the UK's goods and services performance has diverged for a long time. This started long before 2019, but has widened since then. Now, we might say that's an inevitable function of COVID. For example, the supply chain disruptions we saw during the pandemic might have harmed the UK like it harmed many other countries' trade. Oh. We've lost. Oh, goodness. Well, it's a very exciting next slide with a dramatic reveal. So I'll just pause for a second.
It's here. Is it available for our participants online?
So a reason for us to worry is that if we compare the UK's performance to the OECD as a whole, the UK's goods exports are clearly an outlier in terms of their weak performance. I've added an index of the value of the OECD's exports to this chart. The value of the UK's goods exports show here rose just by 0.3% a year since 2019, and that's including the effects of inflation, whereas growth across the OECD was 4.2% annually. And this is a good story, not a services one. The UK's services exports have risen by 7.5% each year, faster than the growth of the OECD since 2019. So, looking at the UK's weak goods performance, this chart shows the annual growth in goods that the UK sells to our top export partners since 2016 on the horizontal axis. And on the vertical axis, the growth in the goods those countries are buying from the rest of the world. Anything to the left of the diagonal line shows that the amount that the UK sells to these partners has been growing more slowly than the amount that these partners have been buying from the rest of the world. This is the case for all but one of the UK's largest trade partners. We highlight EU countries in blue and non-EU countries in red because the EU was the only region where trade barriers increased dramatically in 2021. But it's clear that goods trade with both EU and non-EU partners have been underperforming. Nonetheless, we can't get away from the fact that Brexit does play a role in this underperformance. Studies such as that by Jundu on our panel today use UK-EU goods counterfactuals to suggest that trade is as much as 30% lower since leaving the EU's customs union and single market. And other research highlights that specific sectors like agri-food and textiles saw large drops in EU trade relative to the non-EU since Brexit. This is really important because manufacturing in the UK, for example, remains a really key source of good jobs with pay commonly at middling or better rates across the UK. But if we turn to the picture on services, the UK has long been a global powerhouse in services, maintaining its position as the world's second largest exporter of services for yet another year in 2023. The EU is the UK's largest trading partner on services, but the US here is really close behind. This chart shows that the services the UK sells to many of our key partners have been growing faster than the amount that these partners have been buying from the world. So again, we have the growth on the horizontal axis of the UK and the growth of the vertical axis of what these countries are buying from the rest of the world. For example, the UK's services exports to India are up threefold since 2016, and they've doubled to the US and Singapore as well. The UK's strengths span a wide range of activities, and we have revealed comparative advantages in more than 2/5 of our services sectors. This chart shows the percentage point change in the UK's market share of the OECD's exports to the world. The UK stands out in the OECD for having gained this global market share in many important services, such as other business services, as well as insurance and pensions. And overall, as shown in the red bar on this chart, the UK has increased its overall market share of total services exports among the OECD by 0.9 percentage points. And this is at the same time that places like France and the US have lost 0.1 and 1.3 percentage points respectively. It's puzzling. Modelling, including that by us at the Resolution Foundation and LSE, estimated that some of the worst hit sectors post-Brexit would be some of the services sectors. So what's going on? At least part of the answer comes from considering the different ways that the UK supplies our services. So this chart divides the ways that each sector trades services by our modes of supply. So most of our services are sold through mode 3, which involves companies using this measure as an indication of increased use of subsidiaries. And we can see here that certain sectors like information and communication, a very large sector, other sectors like manufacturing services have increased the amount that they're selling through this channel since the Brexit referendum. Holger Breinlich and Martina Magli have also found that at a firm level, the switch to selling services through affiliates was more pronounced in firms operating in the EU compared to the non-EU, which suggests that firms were responding to anticipated and actual trade barriers related to Brexit, with certain sectors more or less able to do this type of mode switching. The second approach was that many sectors took was to leverage the ability to trade remotely. And here we're showing exports sold remotely as a share of in-person and remotely delivered trade. So we're excluding the subsidiary trade from this chart. And this shows the change between 2019 and 2020. And you can see that overall, the amount that we were trading this way increased, the amount that we traded remotely, but also particularly for certain sectors. So if we look at other business services on this chart, we started with relatively less remote trading there in 2019, but by 2020, we were able to increase the share done remotely dramatically. All of this is good news overall for the UK services. There's this potential to do this mode switching in a way that you don't have for goods trade. But we have a couple of reasons to be a bit worried going forward about this. So firstly, trade done remotely as a share of in-person and remote trade is slipping back now into old habits. So this is the same chart as before, but with 2022 added. Here we can see that other business services has fallen back, so from its high of 89% sold digitally to 82% in 2022. A second reason for concern is that within these broad sectors, there appears to be a disparity in performance in areas where there's both complex regulation that UK firms have to navigate in other markets and where mode switching isn't a quick fix. So here we are showing the growth between 2015 and 2022 in exports on the horizontal axis and output on the vertical axis. And I've adjusted here for producer prices. All services sectors are shown, but professional services and ICT firms are highlighted in yellow. Sectors like film, TV and broadcasting, computer programming, information services are seeing above average growth in both output and exports. It's common for these sectors to set up through subsidiaries and use these subsidiaries to sell their services overseas. On the other hand, exports of some highly regulated sectors, things like accounting and tax consulting, engineering and legal services, are growing slower than average for service sectors overall. So one issue these sectors face is the need for professionals to have their qualifications recognized in each country where they want to do business. These services, accounting, engineering and legal, typically operate more through remote sales than the ICT sectors, for example. So, where does this leave us with our trade strategy? If we take a step back, the government is right to be grappling with how to stay as open as possible and steer clear of an unwanted choice between the US and the EU. But as the government develops its trade strategy, which is due next year, complicating matters is a deeper dilemma, which is that crafting a trade strategy that aligns its approach to goods with its ambitions for our services industries. So 3 things that the government should be considering as we move forward in our trade strategy development are, firstly, staying as open as possible on goods. That will likely mean prioritizing ways of aligning with EU standards, which is more than half of our goods trade. Regulatory divergence is already taking place, so this will become more challenging over time. There's a bit of urgency there. At the same time, the UK should, of course, seek targeted deals with the US and other countries and as tariffs, as we go through kind of tariffs, focus on measured retaliation, as much as kind of the EU will let us get away with. The UK is already an outlier on tariffs on EVs from China compared to both the EU and the US, and so staying as open as possible looks like it will become more challenging going forward. Secondly, we should focus on reducing barriers to digital trade and operating through subsidiaries. So we need to make sure that the ability to move to trading through subsidiaries continues to be open for services that can trade this way, so ICT in particular. Secondly, Britain can focus in locking in data adequacy to facilitate the transfer of data where possible, as well as provisions on electronic authentication, digital identity approaches, and through digital agreements. And finally, we should focus on those highly regulated sectors. We should negotiate some MRPQs, mutual recognition of professional qualification, as well as wider mutual recognition agreements for these key regulated sectors like legal services.
Great, thank you very much, Emily. Some really rigorous analysis there, especially of these different parts of the services sector. Kim, it is very good of you to join us. Thanks for sparing the time. Your observations.
Thank you very much, David, and thanks, Emily. Now, a confession, I'm not really I spent a lot of time in Whitehall, 43 years, but I'm not really a trade expert. John Alty and I sat around the same cabinet office table for many years. John's the expert, I'm a kind of diplomat, and so we know very little about a lot of things. But one thing I do know quite a lot about, I think, is Donald Trump, having served as ambassador there for most of his first term until it ended rather abruptly. And I'll talk about that in a minute, because that's where I think I can add some value. But just to say, I think Emily's paper is a really terrific piece of work. It's really excellent. It's exceptionally timely. I mean, what brilliant timing to bring this out just as the debate on what we do if Trump imposes tariffs starts to warm up. And there are some genuinely serious and important insights in it, I thought. I was struck in particular as a non-fan of Brexit by the impact of Brexit on our trade in goods, on our exports of goods, and the difference between that and services. And it's alarming how badly we're doing on exports of goods since Brexit. I mean, the fact that our goods exports are growing by only 0.3% a year when the OECD average is 4.2%, that's just terrible. So this is really quite serious. It's also fascinating that services have developed these workarounds in terms of digital trade and using subsidiaries, and how successful that has been. But also the point that comes out in the paper that nevertheless you can't assume that services are invulnerable to trade tensions, and the ways in which they can be attacked and damaged, our interests can be damaged if we get to a place where we're into retaliatory action on trade. But let's talk about about Donald Trump. First thing to say about Trump on tariffs is he has a set of beliefs that he has held for at least 4 decades. And if any of you have the time to do it, go and Google an open letter he wrote in the New York Times in September 1987, in which he talks about how America is being ripped off by all its trading partners, that it's spending all its money on protecting others while they sell stuff to America, how the whole post-war international order has really, America's taken on huge costs around the world defending Japan, defending Korea, defending Europe, and gets nothing much in return, and how this is all wrong, and how if he were in charge he would change it all. You could have taken this 1987 letter and plonked it in his 2024 campaign speeches, and it would have sat there perfectly, naturally, as a flow with all of his other thoughts. So these are deeply, deeply held views from which it's very difficult to shift him. Second thing is, if you go back to the experience of 2016 to 2020, his first term, when he started, he didn't know anyone. I mean, his campaign team were all fringe figures. Remember, there were 17 candidates, and the Republicans started their primary process. And the better-known names like Ted Cruz and Chris Christie had got the big names in campaign advice, and Trump had a number of fringe figures. So when he actually won, to his surprise, by the way, he didn't expect to win, he needed advice on who to bring in, and he brought in some mainstream Republican Party figures like Reince Priebus, his first chief of staff, and Gary Cohn, who was head of, I think, Goldman Sachs, and other well-known mainstream Republicans. By middle of his term, he'd sacked them all. And it's quite striking in terms of timing. He starts going down the tariff war route from about 2018, when people like Gary Cohn, who was his economic advisor, his economic counsel in the White House for the first 2 years, had gone. So that's when you got Trump unleashed. And of course, the difference this time is there aren't those mainstream figures, mostly there aren't those mainstream figures in the Trump cabinet. You've seen all the names, which are, it's like a wild west of fringe figures, really. And so he's not going to have the constraints inside the White House this time that he had for at least the first 2 years, I think, in his first term. So is he going to do tariffs? Well, back in 2018, he did 2 sets of tariffs. He did tariffs on, I think, 20% on aluminium and steel from the world, which impacted on Europe quite a lot. And he launched this tariff war with China. Tariff war with China is quite interesting because it continued basically until the end of his first term, and there were American tariffs and Chinese counter-tariffs, and so it was a genuine escalatory spiral. Occasionally it halted, and they claimed they had sort of half done a deal, and that China was going to buy vast quantities, for example, of American soybeans. Don't think that ever happened. And there was a truce eventually declared, I think, in 2020. But he went a long way down this track, and most economists judged it to have damaged America significantly, damaged American economic and commercial interests significantly, damaged the American economy significantly. Trump doesn't think that. Trump thinks that this all went pretty well and that he basically had a success. So what's he going to do this time? Well, if you look at his campaign trail, he has these, his favorite line is, my favorite word is tariffs. I just love the word tariffs. And he then goes on at great length about how he's going to do them. 20% tariffs on all imports into America to basically bring manufacturing jobs back, he would say, and to correct the trade imbalance, except for China, where it will be 60% tariffs or maybe 100% on some things like electric cars and so on. And this is a main element of his campaign, was a main element of his campaign speeches through the 2024 campaign. And basically, as I said, with these deeply embedded views, he does what he says he's going to do. Are there any constraints on him doing this time around? Well, there aren't going to be amongst his advisors, I don't think. Of course, foreign governments will form up to him and say, this is going to damage all of us and may do a great deal of damage to the global economy, and you should think about this, Donald. And his response will be perhaps a bit more polite than this, but he will say, well, of course you would say this, because this is going to hurt you and benefit us, so of course I don't expect you to say this, but it's not going to deflect me. So I don't think foreign governments will have much impact on him. The people who will change, or might change his mind, let's say will, are the American business community. A lot of them, remember, voted for him. People think that the Trump base is all basically America's blue-collar classes. It isn't. There were as many BMWs turned up to his rallies in 2016 as there were pickup trucks. This is a guy who has a lot of supporters amongst businessmen. Some of them are saying already that they think the tariffs are a bad idea. Some of them will have his mobile telephone number. They will be phoning him and saying, don't do this, and here's why. And it is possible that that will have some impact and that he will at least delay and think about it more, or maybe even decide not to do it, or do a much less aggressive form of it. For what it's worth, though, my guess is that won't happen, and that he will impose them, because ultimately he says what he's going to do, and because he has said that the money he gets from tariffs will fund the tax cuts that he intends to get through. He did the first biggest tax reform since Reagan in the mid-80s in his first term, and he wants to do more tax cuts now. So where does that, I'll finish soon, where does that leave us? Well, obviously we're going to have a decision about whether we retaliate or whether we suck it up or whether we do partial tariffs in return or whatever. I think the American side, the Trump administration, may offer us two things. One is they may offer a free trade deal. Now, John knows much more about the detail of the last negotiation than I do, but I know that the top of American demands back in 2018, when we sort of kicked this off, was much, much greater, almost unrestricted access for quite a lot of American agricultural, mostly meat products. So that's obviously chlorine-washed chicken and hormone-treated beef, but it's actually a great deal more than that, and it would massively undercut, I think, the British agricultural produce markets. So that, I think, is already a huge problem. And then he might demand things on pharmaceutical prices and that kind of thing as well. And then the other thing that he may say is, you can have a free trade deal, but you need to align your regulatory regime not with the EU, but with us. And there's already one of his economic advisors, a guy called Stephen Moore, out there saying the Brits need to align with America, not with the socialist European Union. So these are the sort of things I think that will be riders or conditions for any trade deal. And I think they will be unacceptable to us. And I think that's right, they should be unacceptable to us. And I think it's a very important point in Emily's paper that we should actually stay aligned with EU regulatory standards, not try and shift across to American ones. So it's probably about all I should say now, except to say, one thing that I've learned from this paper, which I hadn't realized before, is the potential damaging impact on our own imports if we go down the retaliatory route, and that maybe, although this sounds a bit sort of weak, maybe sucking it up is the best course. I'm not convinced of that yet, but it's a new thought that literally comes as I read Emily's paper, and it's a very interesting one. So something I shall ponder on while we wait for Inauguration Day.
Thank you very much. And we have indeed, we're going to have a poll question in a moment where everybody here will be able to assess that as one of the options for responding. It was fascinating. Thank you very much, Kim. Now let's turn to Ewan, Professor Du, and hearing Kim reminded me, of course, that Aston Business School in the home city of Joseph Chamberlain, shaped by Joseph Chamberlain, who destroyed one political party and took over another in the cause of tariffs, and seeing and taking over the Conservative Party on the argument that tariffs was a better way of funding public services than Lloyd George's taxes. So if there is one prominent British politician who has tried a version of this, it was indeed the Mayor of Birmingham. So, Ewan, over to you for your observations.
Thank you, David. I think Birmingham has moved far beyond that point. I think the globalization has benefited the region as well as in other ways. I guess the first thing I would like to say is many congratulations for Emily and Sophie for an excellent piece of work, which I strongly recommend you to read, and I read word for word, and I learned a lot. Thank you, Emily. I think it is one of the first study which has gone so much in depth for explaining what happens to service trade since Brexit. I think Emily has taken on this daunting task, and many people try to avoid, and managed to pull together a lot of evidence which are really helpful in thinking about service trade. Everybody knows that it's notoriously difficult to analyze trade, and partially because the data are so patchy and inconsistent in many ways. So I think it helps us to understand why service has been doing well from the raw data, and what might be that resilience coming from and can be explained. So that's the second point. I also really appreciate the fact that points has been made in this report, which Emily didn't really explain very much just now. The point about the link between service and goods. So I think it's a danger to really choose, because they're so intimately linked in modern society, modern economy, and you can't really abandon trade in goods and really solely focus on service, and vice versa. I think that point is really worth pondering upon. I have a couple of areas after I read the paper that I felt I really wanted to know more, which perhaps it's worth discussing and worth exploring further. I think the first point to make there is that it's a lot of stuff, a lot of insights, a lot of explanations which we haven't heard before, and it's making sense. On the other hand, it is not causal analysis. So in the way that we don't really know what exactly happens in terms of Brexit impact on service trade in the way that we know now for goods, for example. So that still needs to be understood and analyzed, especially at the firm level, so we can actually understand the mechanism through which the resilience part, why it's being resilient, and actually the other part which has not quite been resilient, and what can we do about it. The second point is that I felt, yes, I think it makes sense that digital trade helped. The workarounds, in Emily's words, in terms of mode switching make sense. But I felt I wanted to know more about why the services sectors and certain parts are resilient. What are the underpinning forces that made the strength of the UK services? Is it about it's a unique trade that we're offering that better than others? Is it cheaper? Is it a type of services that others are not catching up? Is it innovation? Is it the quality of the services? Or is it a network of services which UK is part of EU, service network chain? There's no really solid evidence there. In a piece of evidence we submitted to Parliament some years ago during COVID, I remember, looking into professional business services. I think one of the evidence we provided, I thought, making sense to us, is UK is very tightly embedded in the service network of the whole Europe. So if you see that, different kind of, accounting, auditing services, and maybe some professional services, they're all tightly linked together. And UK, compared to France, for example, has much more tight and integrated service networks. Is that the reason it's so resilient? Because the implication of which would mean that we probably shouldn't let that go. So the underpinning forces of the strength needs to be understood better. Now, the third point of Mode 3. Mode 3 indeed has explained, I think it makes sense, but there are a lot of downside of Mode 3, as you probably know, as firms found different ways to pivot and be agile by moving subsidiaries different places, which on the book we can see more income in terms of selling services, but we're losing a lot of things, not just the jobs, not just the tax revenue, but also the opportunity to innovate and to make things, to create the new type of processes. So this will be gone. So is that something we should encourage? And I'm not sure. I think there are really serious downside we have to consider through that mode swapping. At the same time, there's huge amount of issues with price transferring. So do we know a lot about how much is genuinely the mode switching, or is actually playing around in the book, and where we end up losing the valuable investors and production or services to elsewhere, even to tax havens. So that needs to be understood. And all this underlying the huge question behind is, what are the strengths will sustain if something changes? For example, very much services driven by investors, but investors are very mobile, and they are driven and motivated by different conditions, including the war or industry policy. So that means there are a lot of uncertainties ahead. Now, with all that, what should we do? I think broadly I'm thinking of two things. One is, what do we do with UK trade, despite of all the noises and what's coming? I have looked into a lot on trading goods, which I will probably focus. I think what we have always thought to do is still the focus. Fixing the trade relationship and improving the trade relationship with EU, I think, is still the priority, no matter what happens next, because this is about fundamentals. So from the goods trade side, we know a couple of things. Brexit has damaged goods traders in terms of both the value of trade and the variety of trade, which means the part of the resilience is really shaky, and a lot of small business, medium-sized business probably have stopped trading and trade with very thin profit margin, which make them very fragile. So given that, I think that's still the focus. What do we do in order to create business environment and trading conditions to allow companies to regain some of the competitiveness will be the key. And what do we do about that? I think the first thing is to fix what's broken, and focusing perhaps the most tangible and doable, the areas which trade challenges have been most significant. For example, start with agri-food sector, look into the sectors which have been damaged the most. In our goods trade analysis, we find, for example, textile, manufacturing, which are based on material like wood, paper. These kind of sectors are damaged the most, but the negative impact are cross-border for all sectors. And the second is really to prevent the further weakening of the supply chain that UK has been previously fitted within the EU-UK supply chain, because that is where the competitiveness has come from. And our analysis shows that such weakening supply chain is evident, and we don't want that to get worse. And the third thing is think about how we can actually build strength. That is, no matter whether you're thinking about the short-term resilience to challenges, or the long-term to building that competitiveness both in EU market and abroad, is fundamental. And in that, I think a point to make is that trade strategy or trade policy should really serve industry policy or industry strategy. So there, I think we're going to talk about it. Yeah. So would you like me to?
I think I'm afraid we're getting a bit tight for time, because
Sure.
there's a lot of questions.
We can talk about
But
Trump.
that's very helpful.
Yeah.
Thank you very much. Thank you. John, over to you.
Okay, and I'll try not to take up question time. So I agree. I think the piece of work is very timely, Emily and Sophie, and shed some new light. So I'm sure it will provoke lots of comment and questions. There were 3 points I was going to make, which overlap actually with a bit with our earlier panelists. So first, some thoughts on likely scenarios for the UK as a result of what Kim said is, it was written down in 1987. Secondly, I originally titled this, Does the UK Need to Choose? But I thought I'd get my wrist slapped for saying that. So what pressures on the UK might result from what the Americans might demand of us? And then thirdly, what does this mean for broader trade strategy? So let me say a little bit about each of those. Kim's talked with a lot of experience about why Trump thinks what he thinks, but also what are he trying to achieve? And we have seen some signals and some comments, not all of which, dare I say, are entirely consistent. So he has already announced, as I'm sure many of us know, tariffs on Mexico and Canada, who he happens to be in a free trade agreement with, or the US does, that he negotiated, which is very encouraging. But those tariffs are, the quid pro quo apparently is nothing to do with goods trade or services trade, it's about immigration and fentanyl. So that sort of implies that this is a power play for whatever he thinks is important politically to the US. In China, his sort of comments are much more, I would say, straightforwardly, we have a massive trade deficit, we've got to do something about that, the Chinese are unfair, it's linked to security, but that's clearly, and we saw it in the first term, a big trade issue. And then we've had people around him, and again, I was listening to what you said, Kim, but we've had people like Scott Besant saying, well, actually, this is all about getting the Europeans to reduce their massive tariffs. He seems to have a rather strange idea what European tariffs are, but tariffs aren't a good idea, but they're a good leverage to get other people to cut their tariffs. So it is pretty unclear. The UK has not been mentioned specifically, although we can't be complacent. So yes, what are the scenarios? There is an FTA type scenario one could envisage. We spent a lot of time negotiating that first time round, but I agree with Kim for the reasons he gave that I don't think that's going to get off the ground, although if it's us that turns it down, that might not be helpful politically. But I think there will be pressure. We won't be immune from this. And that really leads me on to my second point, which is, what are the pressures and what might they do to our relations with the EU or other countries? And first thing to say is, there are some things we can do with the EU and the US which have no particular impact on the other. So if it is pharmaceutical pricing, then that's not particularly a thing for the EU. The EU doesn't care what we charge, particularly for pharmaceuticals. They might even welcome it if we put them up. But and similarly, a mobility or youth mobility agreement with the EU, the US won't care whether we have that or not. So there are things, it's not as though everything's in one pile, but clearly food safety, if that did arise, would stop us if we did go some way towards the US, stop us doing this veterinary deal, which would have these negative impacts, or rather stop us getting positive impacts for our food businesses vis-a-vis the EU. We haven't talked yet about the environment, carbon border adjustment mechanisms, where I could imagine the US will not be at all happy with what the EU's doing and will not be very happy if we do the same thing, which we've said roughly we're planning to do. So you can think of things that could put pressure on the relationship, regrettably, either way. However, it's not just a sort of bipolar thing, it's also other countries and particularly China. So as people have said, the UK has not put tariffs on Chinese vehicles. I can't imagine the Americans are terribly happy about that, and they certainly won't be happy if UK cars with Chinese batteries are going into the US, sort of circumventing, as they would see it, their tariffs. Export controls, Chinese investment. So this reset, not only with the EU, but with China, that we've started to see from the UK government, I think, if anything, is in more danger from the US than our relationship with the EU. Finally, some thoughts on trade strategy, which you came to at the end, and this is going to be very high level. Clearly, the government needs to have a trade strategy for the world we are in rather than the world we would like to be in, and the world that the UK would probably like to be in is much closer to what was going on before 2016. But I would say, and perhaps I would say this, I think it's a mistake to regard trade policy as a tool of foreign policy or industrial policy. It has lowering barriers to trade has benefits in its own right. It increases competition, it increases innovation, it has benefits for consumers. So there is a balance to be struck there. And my final, therefore, point, taking three phrases: cooperate, challenge, and compete, which I believe I've heard in other contexts. We need to cooperate with those countries, including the US, where we can, to the maximum degree, because keeping markets open is good for the UK. We need to challenge the analysis that protectionism is good where we can. And we need to compete in our own way, which does not always mean following what other people do. So we'll come on to this poll in a minute, but I'm not sure that it would be a good idea for various reasons, to retaliate if the US does impose tariffs.
Great. Thank you very much. Thank you, John, for ending on a note of robust defence of free trade and not being a tool of other policy areas. What we might do in the limited time we've got left, I think we'll focus first on the Trump issue, and then secondly, we'll move on to the wider strategy. For our online participants, and many of you putting in questions already, do go to the Resolution Foundation website and the Slido page. I'm going to call up the most upvoted questions are both ones around Trump and tariffs. So this is, the first question is, President Trump has said much about tariffs, but little about services. Mm-hmm. So what do we think Trumponomics will mean for services that are so important to the UK economy? Then I'm also going to, there's another question, here we are, about what the risks are from tariffs. And I'm going to call up as well a poll question now. We're not going to, for you to consider. I'm not going to I'm going to give people some time to respond to this, but this is the question that if Trump imposes tariffs, how should the UK respond? And here are the options: from retaliation with reciprocal tariffs, symbolic tariffs, do what the EU does, suck it up and don't respond. And that I detected a little bit of a view that that must not be seen as just a pathetic and feeble response. There's some support for that. And promise to buy their gas and soybeans. So there's a range of options. And let's go through the panel. In fact, let's take this in reverse order. So John, do you want to comment first how you get into a little bit more detail about your ideal response to a Trump tariff war?
Well, I wouldn't start from here.
But you said we should, yeah, but we are starting from here, aren't we?
No, quite. We are. So what I mean by that is, if I were indeed back in government, the government needs to be, well, I'm sure is, reaching out, Kim's successors, to understand, as I said earlier, what is Trump trying to do if he is imposing tariffs on the UK? It's not about fentanyl, presumably. And we have a balanced, more or less balanced trade position. So it's not like with China or even the EU. And so, I defer to Kim on knowledge of Trump, but the deal. What is the deal? And so,
which of these options would you go for? How are you going to vote in this poll?
I don't think we should respond by putting tariffs on ourselves. I think we should be looking for other things that we can do, which will mean that we don't get the tariffs or they get lifted.
So yours is so you're going for an option that isn't really there. You're saying,
well, I'm saying it's
suck it up, but and respond in other ways.
Yeah, basically.
Right. Okay. Right. Interesting. Sorry that we failed when Emily and I prepared these polling questions to catch the subtlety of John's approach. Sorry, we didn't give you that one. Now, John Doo, what's your advice?
I think it's really difficult to choose what to do unless you understand what you are facing. And we don't really understand what we are facing, not because we don't really know what he's going to do, whether you take the face value of it, etc. And partially also because we don't really know the potential effect of it. Let's just quickly run through it. So now, what's said is China 60%, Canada 25%, the rest of the world 10 to 20%. That means EU 20%, 10 to 20%, UK included. Now, EU in the last few years has, between 2018 and 22, EU has already retaliated because of the tariff increase for aluminum and other industry goods. So that has been suspended, but it's still there. But EU over the last few years, and we have audience here, David knows much more, has developed several tools and instruments to, ready to go to retaliate, including anti-coercion instrument, foreign subsidy rule, and government procurement. So they're all ready. Now, how is that going to impact on UK? Let's say goods first. The top goods that UK exports to US is machinery, mechanical appliances, vehicle, pharmaceutical, optical, medical devices, and organic chemicals. And these are the strengths of the UK, but a lot of that will come from other countries because of the intermediate inputs, and China included, which means that in addition to the 10% or 20% that these goods are subjecting to, there will be additional one because it coming the rule of origin rules there. And so direct impact, indirect impact. And for services, and as it happens, Simon Evident has done some analysis recently and published last week with some scenario. So it takes stock of what happens in the first term and looking at how the goods tariff increases led to service trade from US. And the conclusion seems to be that because of the need to rebalancing the current account, which means that rebalancing the trade surplus, US with the rest, and it happens the US trade in services has actually peaked in 2018 and has a sign of declining. So as a result of increasing the trade good tariff, US service has been declining. And through some analysis, the authors have concluded actually countries like the UK, Switzerland, and India would have things to gain. So that would be the good news for UK. But in addition to that, just one more point. Of course, that's the balancing the current account side. On the other hand, at the same time, goods linked with services. So any services linked with goods will be punished at the same time. And the GVC, the global value chain restructuring, will mean some of the services will move around as well as investment.
Right, but that is a very interesting point. You're saying that the previous Trump tariffs were bad for US services exports, and that might provide an opportunity for UK service exports. A really interesting observation. I think before I turn to Kim and Emily, let's have a look at where our poll results have got to so far so that Kim and Emily can comment on them. It's interesting, the aligning with the EU is the most popular response. Let's hear from Kim and Emily, and then we'll have more Trump questions from our people here in the room. Kim.
Well, I'll be very brief. I think might change my mind in 2 months' time. I think I would go for suck it up and don't retaliate, but say retaliate rather than respond, because what I would say to them alongside our not retaliating is, can we work not on a free trade deal, but other things we can do in services, whether it is in digital trade or in protection of subsidiaries or something. John will know much more about the options here than I do. That would enhance our services trade, which is our success area anyway with the US. But meanwhile, which is what we're doing on electric cars at the moment, Chinese electric cars. And I'm not sure if it's not a good idea to actually, it sounds counterintuitive when we're being beaten over the head with these tariffs, but maybe in our own economic interests, that is the best answer.
Yes, and it's a very interesting point in Emily's paper. Emily, take us through these options. Where would you go?
So I think one thing as part of this paper that I've been doing is spending a lot of time in the government's supply and use tables, which look at the interconnections across the UK's economy of different sectors and where kind of inputs are coming from. And I think one interesting thing from that analysis shows, we know that we import a lot of goods into the UK, but more than 60% of the goods that we kind of consume in our economy that go into other kind of intermediate demand, into final demand, are all imported. So the effect of kind of tariffs on imports could be quite, adding tariffs on imports, if much more widespread, could be quite damaging in terms of our supply chains and also the consumption of goods that we have. And that is much more kind of import-intensive exposure than export-intensive exposure. So yes, goods are pretty export exposed too. We're selling about kind of 25%, a quarter of our goods into the world that we're producing here. But that's compared kind of to the 60% on the import side. So you do have a bit of a kind of supply chain balancing issue when you're thinking about retaliating through things like tariffs. Although, of course, I think, you need to also have some kind of credible ways to respond. And this would, come to more of like a game theoretic perspective for the government. So, I think it's right that they're developing these retaliation approaches. And, I would hope that we don't have to implement too many of them because we're negotiating with the government. And just on the services side of things as well, I think Jun's point on, the services, it could go kind of either way. As I was doing analysis for this report, I was looking at some of our key services sectors, like things like computer services, software engineering, and comparing adjusted wages that the UK pays for those sectors versus the US pays for those sectors, for example. And we have very highly skilled workforces in the UK, but people who do those services in the US are paid about 50% more, even adjusting for kind of the different cost of living in the US and the UK. So, to Jun's point on diversion, you could maybe see some of that diversion happening for some of those high quality, highly traded services like that. But at the same time, I do think, there is a risk on the goods related services side of things. And goods related services, it sounds very odd, but if you think about things like you're advertising an iPhone, you're engineering the design of a computer chip, for example, all of those things we would consider to be services. So I think that those are the things, that could be hurt when we are thinking about potential tariffs from the US.
Thank you very much. Now, for people here physically, any interventions, particularly in the area of Trump and tariffs? Let's collect several brief interventions there, and then at the front. Yep. And if you give your name and organisation, please.
Hi, thank you. Guglielmo Santamaria from the Bank of Italy. Thank you for this insightful panel. We've considered a direct reaction to, say, tariffs imposed universally by Trump. But given the fact that the UK would mostly be hurt indirectly from, say, for example, issues in the supply chain, on which the UK relies on Germany, and Germany, for example, relies on China, what would be the actions that the UK could take to moderate the indirect effects of tariffs not levied directly on the UK, but the effects on the broader supply chain? Thank you.
Right, thank you. And I think in fact, there's two questions along there. Yeah.
Hi, Anne Renison, Sec Newgate. I was formerly worked under John at the DBT, DIT, and as a pad to the last Secretary of State. question about how Trump 2.0 seems more interested in using foreign tariffs to address foreign policy, something that Lighthizer, who is now not in the administration, it seems to have been confirmed, is comfortable with. How do we manage that? Because we've got Nigel Farage around, who is probably in his ear talking about, yes, the EU in a way that Trump probably wouldn't be thinking about, but also the Chagos Islands, what our relations with China are. Does that introduce quite a bit of uncertainty in how to sort of address that?
Right, there is a wider context. Yes, and over there.
Hello, I'm Justine from the French Embassy. I have just a question about like wider Trumponomics, because even though Trump's love tariffs, Trumponomics is not limited to tariff, and I wonder what could be the effect of also all these tax breaks, and like also considering the presence of US tech companies in the UK.
Right, and then at the front here as well.
David Hennig, European Centre for International Political Economy. I'm less pessimistic than Kim about direct tariffs, but I'm much more pessimistic probably about the future of the WTO, because none of what Trump is discussing is in any way compatible with WTO rules. He obviously doesn't care. What is the risk for the UK from basically a bit of a breakdown of WTO norms and rules?
Very good point. I'm gonna turn to Kim first, and if I may, Kim, add one other question just to elucidate these sort of retaliatory issues. There was the attempt in the last Trump administration to look at tariffs and selective tariffs very politically in terms of congressional leaders who had particular exporting American companies in their congressional districts or states, and the EU and I think also the UK tried to think of areas where there was a direct political cost. Is that going to be part of a consideration of a response in the future? So why don't you set the ball rolling, Kim?
I'll leave the supply chains question, which is beyond my expertise. But on a few points. First of all, it's a very good point. I'm interested that you're not pessimistic, as pessimistic as I am on what Trump will do. But I have to have a different discussion about that. But if you look at Trump's worldview, tariffs, but also his disdain for alliances, his belief that America should not be the world's policeman, his opposition to foreign interventions, all of this, but also his disdain for a whole range of international organizations, not just WTO, but the UN, dare I say it, NATO, the EU, and so on. He's essentially opponent of, doesn't like the post-war international order. And he's not merely trying to disrupt it. You could say he's actually trying to dismantle it. And the fact that in his first term he refused to nominate or allow the nomination process for judges on the appellate court of the WTO is just one of the things he's done to damage it. Yeah. But he won't care at all what the WTO thinks about any of this. It's already, I think, weakened as an organisation, seriously weakened, and I fear the next 4 years is going to do still more damage to it, and potentially to other international organisations like the UN and all its subsidiary bodies too. So this is going to be really challenging, and if the World War II international order looks the same in 4 years' time as it does now, that in itself will be a success. Just very briefly on Trumponomics. Look, he did these huge tax breaks in 2018, biggest tax reform in the States since Reagan. I think if you look at, and most economists say this, if you look at the trajectory of the American economy during Trump's 4 years, his first term, it was pretty much on the same trend as it was in Obama's second term. So it didn't really produce any dramatic rise in economic growth. And there was no evidence that giving these very big tax breaks to very rich people and to corporations did anything dramatic to the US economy. So I would have said it was a comparative, economy did okay, and obviously people felt it did better in his term than it did during Biden's term. But if you look at the statistics, it really wasn't anything very, very impressive at all in that term. And I don't think if he does more tax breaks this term, I think it's going to do better. Inflation is coming down, there'll be more growth in the American economy, etc., unless Trump damages it by putting lots of tariffs on, and that damages things. But I don't think, I don't think on the evidence of his first term, he's going to be an economic magician who produces dramatic growth out of the economy.
Thanks. And if we can keep it short, then there'll be just time for one further range of questions. Don.
Okay, 2 points. I did want to come back to services, which we were sort of raised earlier, because let's remember that we are not moving from some free trade Biden administration to where we are now. And actually, I think there's probably on many service sectors and tech sectors more scope for doing deals with Trump than there was with Biden. So that's one area where I think we can benefit. I'll link the WTO and some of the rules of origin type stuff, and is it all diversion? I mean, it sort of undermines the whole basis. At the moment, there's a MFN basis for tariffs if you don't have a trade agreement. And so we don't have a trade agreement with the US, so we just send stuff in and that gets their standard tariff. If, however, Trump rips up basically the MFN system and starts imposing tariffs all over the place on individual countries, then the system sort of, I think, but there may be other experts who can say better than me, will start to break down, because we will have Chinese and German and whatever stuff in our supply chains. Up till now, that hasn't really mattered because the tariff for everyone is the same. If it starts being differentiated, then we will be accused potentially of, circumventing things meant for China or tariffs on China. So I think that is going to get very messy. I think I'll pause there.
Right. Thank you. Yundu?
The one point I want to make is that maybe the effect of Trump tariffs is not going to be as scary as we think it will be. The reasons being, if you look at the first Trump war, trade war with China, so the tariff to China raises from less than 3% towards the end of the trade war to 20%. Now the forecast is applying for the 60% and everywhere else in retaliation, that would raise to 30% from China. But China has diversified. The share of Chinese trade to US now is only 16%. Now China has been preparing for this as well. In the last months, you would observe a few things. One is the opening port in Peru, which is a deep port trade, and that would reroute a lot of critical material and China's goods to South America. And in the first Trump war, you already see the global value chain restructure towards Southeast Asia. So in the way that now the forecast through modeling is to say that China will be able to digest all the additional tariffs within 3 years. Of course, at the same time, it also predicts that in 3 years' time, the global economy in terms of trade will wipe out the GDP worth Germany and France combined. So that means, number one, whether it's effective or not, it really depends on a lot of scenarios, whether Trump is going for it, because evidence is against that plan, and where is gonna go for it. At the moment, US market suggests booming because the expectation of relaxed regulation and stimulus in physical terms really attract firms to locate. So that looks like good news. But at the same time, American dollar is appreciating. That would decrease the competitiveness of US goods. So by the end of the day, this may not just as we imagine, then the effects will be slightly.
Thank you very much. Emily, very briefly.
Very briefly, I think as Jun says, there's a lot of kind of scenarios and knock-on impacts that could happen. The key overriding point that I'd like to make is that the market is super interconnected. So, what happens to our major trade partners has an influence on what happens in our economy as well. If the US economy is booming, it's better for us. If the EU is booming, it's better for us. So, and vice versa. So that's going to be really important. And, if we learn anything from COVID, we learned that, you can have these big global economic shocks to things like energy and supply chains, and that's going to impact a lot of markets around the world. And we saw kind of inflation happening all around the world because of that. So I think, really focusing on kind of the interconnected nature of our trade is important.
Thank you very much. In the last 5 minutes, I'm going to try to squeeze in the wider perspective. Of course, Trump is very significant, but we've got a poll question, which I'm going to ask for their final comments, our our panellists to respond to, which is just what is the upside geographically for UK trade over the next few years? Just thinking about the opportunities, and Emily's own paper has got some fascinating observations about, for example, how well we're doing on services trade with India. So looking beyond Trump to trade strategy, John, your observations on this question.
More crystal ball gazing. There are two things to remember. One is the size of our trade with the market, and we all know that the EU is our largest trading partner, and the other is the growth rate. And so clearly, even small improvements in our trade with the EU, even if the EU is not growing like Southeast Asia, potentially do have, as people have said, a big impact for the UK. So we've got to, if not do all of this, we've got to back different horses. We've got to be in the fast-growing parts of the world, but we can't neglect the EU.
Thank you very much. What's your response, Ewan?
I think EU is, again, by far, the most important market. I think that's the given. But in the future, near future, I would like to say, so India, China, and Southeast Asia should be the fast growth area for both goods and services. And jumping on the fast train to identify what really UK is good at, not wholesomely, but finding the niche and finding the specific area which mass production cannot create and which is our advantages will be the key.
And you think those are particularly services exports that you're thinking of? That?
Not necessarily. I'm thinking of, for example, EVs. Oh. Now, EV cars from China are desperately finding markets, but in terms of after-sale markets, or in terms of future mobility, the autonomous drive system, all these areas, China cannot do everything by itself. So it needs places to collaborate with.
Thank you. Kim?
Three very quick points. First of all, I agree on the importance of the EU. I just think the government should be a lot more ambitious in its approach to this reset. And polls suggest that the British public are not actually opposed, majority aren't opposed to rejoining the single market, for example. Don't want to get into all that now, but I mean, 50%, more than 50% in favour, 20% again. So, we could go a lot further.
Yep.
Second, it's very striking, having read this paper, how well services are doing and how clever they have been in circumventing some of the downturns, some of the problems around international trade. And I think there's obviously huge potential for them in the future. Third, if we can avoid getting dragged into a US-China confrontation and trade war, we can do our own stuff with China and still pursue that economic and commercial relationship. And there's a bit of a reset going on there with Starmer there recently. There is huge potential there. I mean, last time I checked, Germany does 5 times as much trade with China as we do, 5 times as much exports. And they're not 5 times bigger economy, despite Brexit. So there must be huge potential there. If we can not quite get back to the golden era, but get somewhere a little closer to it.
Yep, very good. And Emily, a warm response to your excellent paper today. Your final observations.
So I would say that over the last few years and for a longer period of time as well, services exports from the UK have been growing much, much faster than goods exports, and now they're much more than 50% of UK exports. So I looked to there for kind of the growth rate in terms of the UK going forward, and I think they're key markets, definitely India and South Asia, a really interesting one to look out for, high risk, high reward, but also the US, I think, for services is the biggest services trader, and I think that's going to keep going. It's not being targeted by tariffs.
Thank you very much, Emily. Thank you to all our panellists. And I think a sort of a slight note of positivity. However disruptive Trump is, we've got some strengths. We should be proud of them. Thank you very much indeed for your contributions. And thank you to everybody who's been here. Thank you.